Hi friends, how are you? We will learn in this video controlling interest and non-controlling interest and the treatment of non-controlling interest. Please subscribe the channel and click the bell icon to get notified for the next video. Non-controlling interest. When a company buys share of other company more than 50% through investment, it has control over other company that is subsidiary. It is called controlling interest. Non-controlling interest. If a company buys 80% share of the other company, it means 80% of assets belong to investing company, that is controlling interest, and other 20% belongs to other shareholder of that company. This is non-controlling interest with respect to the investing company. Now we will start the adjustment of controlling interest and non-controlling interest at proportion basis through a simple question. There are the financial statements of parent and subsidiary company. Parent company some year ago buys 80% share of subsidiary. At the time of acquisition, the other reserve was 100 and retained earning was 5,000. Here we draw consolidated financial position. Before going to the question, we calculate the amount of goodwill, non-controlling interest and other reserves and retained earning in working notes. These are the working notes. Here we write the investment amount. Less net assets acquired. It includes share capital of the subsidiary and the share premium of the subsidiary, other reserves of the subsidiary at the time of acquisition, retained earning of the subsidiary at the time of acquisition. This is the sum of total net assets of the subsidiary. %80 of the net assets belongs to the parent company. Now we have to calculate 80% of the net assets. Multiply by 80%. Amount of investment less assets acquired. This is the amount of goodwill. Before going to Calculating the non-controlling interest, we first calculate other reserves. P is other reserves. $3,000. Post acquisition of subsidiaries other reserve. 2,000 less pre-acquisition of subsidiaries other reserves. This is the total of other reserves which is increased after the acquisition, and the 80% of this other reserves belongs to parent company. %80. This is the amount of total other reserves, and we will calculate the amount of retained earning. Parents retained earning 41,000. Post acquisition of subsidiaries retained earning 28,000 less pre-acquisition of subsidiary retained earning 5,000. 20,000 minus 5,000, 23,000. Now 80% of 23,000 belongs to parent company. We add up both amounts here. The total amount of retained earning is 59,400. Now we will calculate the non-controlling interest. Net assets that is 33,000. Other reserves $1,000. Retained earning $23,000. Non-controlling interest is 20%. We will calculate here multiply by 20%, and the 20% of 1000. We add up three amounts here. And this is the amount of non-controlling interest. Now we will go towards the question. The amount of goodwill. Here we will calculate the amount of goodwill. And the non-controlling interest is 11,400. Other reserves of the group $3,800, and the retained earning $59,400. And all other items we will add line by line. Investment is 0. Inventories of both companies and receivables of both companies. Cash and bank, and then we will calculate the total amount of assets. Share capital of parent company, share premium of the parent company, and the amount of creditors. And this is the statement of consolidated financial position. Please don't forget